Hey everybody, good weekend. Here is your market minute for Sunday, the 4th of June. I'll start out today's market minute on the S&P chart, and after what seems to be months, we finally got this breakout to the upside above 4,200. So that has been the level that we've been watching. I thought, quite honestly, that we were going to need a dip back down to 4,000 before we'd get a valid breakout about 4,200. But what we did was we got a series of these little micro dips over the last couple of weeks, and that was enough to build up enough negativity to allow the price to squeeze higher on a surprisingly strong jobs report. So the Fed's been unable to destroy the jobs market so far. We'll see whether or not they're going to continue raising rates in a week and a half from now. But my sense is the market doesn't care as much about interest rates as it did last year. Everything was about the flux of change last year, and we're seeing less and less importance on the PPI, CPI, and PCE reports. We're not getting these big, wild swings anymore. So anyway, there's the S&P breaking out, and really the culprit for this has been the NASDAQ with large cap tech, which has been just destroying it to the upside. But I think that there's a limit to how far we can go. Typically, when we see markets get into an exhaustion level down here into the lower 30s or into the mid 20s, especially on the daily chart, this is typically when we see a market move into some type of consolidation behavior. So whether it's sideways or whether it actually pulls straight back or not, or even if it grinds higher very slowly. All of those are valid forms of consolidation, and we'll see the energy recharge once again. So what's going to happen in the near future is more than likely profit taking on a lot of these major stocks that are in the NASDAQ 100. And I think a lot of that money is going to rotate over, at least in the short term, into some of the major industrials that are contained in the Dow. This is almost setting up as a perfect inverted head and shoulders pattern on the daily chart with a 34,000 neckline. And that's going to roughly, just really roughly set us up for a move, which is going to go for somewhere near the all-time highs in the Dow. If we take that measured move from the top of the head to the neckline and then extrapolate that forward, we're going to be very, very close to all-time highs on the Dow if that turns out. So watch for rotation in the short term from the super performing large cap tech back into industrials, maybe financials. Energy has been somewhat depressed lately. Watch for rotation back into the blue chips in the short run. That's it for today's Market Minute. Thanks for listening. We'll see you in the next one.